You were not meant to be a slave to the grind. You were not meant to trade your life force for money. You can escape gravity. You can unlock your life. You got this. Let's go.
Hello and welcome to Unlock Your Life. I'm your host, Jennings Smith. I've got a great show for you today. Super excited. I got my full media team here and we've put together a story about a deal that we just closed on Monday. So big story, big idea is we've got this property in Barberton, Ohio, which is outside of Canton, Akron area. And it's 34 units. It's 100% full, right? They're below market rents by about $150. And so we located this deal. We bought it. We closed it with no money down. We closed it with some pretty creative financing. I'm going to tell you about that in a minute when we get to that point. But I wanted to recap this story. Hopefully it inspires you. It shows you that you don't necessarily need the best credit in the world. You don't have to have hundreds of thousands of dollars in the bank for down payments to be able to make stuff happen, to unlock your life, to change becoming a wage slave, trading all your time for money and having no freedom to do what you want, to pursue the dreams and goals that you may have. So how did we find this deal? This is something that most people ask us in the beginning. They're like, dude, how do you find off-market deals? How do you find good deals? There really are no deals to be had. I'm looking on LoopNet or Crexi, some of these websites that have these multifamily properties publicly listed, and nothing looks like a good deal to me. So how do you find a good deal? Well, one, you put it out there. That's what I've done. I've put it out there. I've built a community on Facebook telling people this is what I do. And so it gives me the opportunity for people to go out there and look for deals. And if they find something that I like, I can help them partner, right? I can help them close the deal. So that's how this was come to me. This is how this deal came to me. Was I had a person in my Facebook group who reached out to me and said, hey, I found a deal. But how did that guy get the deal? Is he, doing massive cold calling? Is he knocking on doors? What is he doing to get this deal? Broker relationships. This was something that a broker had called the owner, said, hey, would you want to be interested in selling your property? And a lot of times these broker relationships can yield really good deals because they'll call you before they blast it out on LoopNet, before they blast it out to the whole world. And they'll call you and say, would you like to look at this deal? I got something that maybe is interesting, and you're getting the inside track on that deal before the general public. 9 times out of 10, deals that trade in commercial real estate, they happen when the broker brings those deals to his or her 5 to 10 people that are solid buyers. They bring them to them, and those people pick up the deal and scoop them up, and they never go to market. So the average person never even sees the good deals. So how do you get on that broker's list? Is a great question. That's something that we talk about. That's something that we teach in our Facebook group. If you're interested more in that, you can jump in my Facebook group, My First Million in Multifamily. But this is how this guy got it. He built a relationship with his broker, and he did not have a massive portfolio. He had a couple duplexes, but he did not have any multifamily. But he built a relationship with this broker. She called him and said, hey, I've got a deal. I think this looks like a good deal. The seller wants $1.35 million for this property. So he looked at it, he brought it to me, and we started to underwrite the deal. Underwriting means we plugged into the analyzer. They're only collecting $500 a month in rent. So when you look at the numbers, they're only collecting $15,000 a month. They want $1.35 million. It's quite a bit of money for that property. But when we looked at the surrounding area, everything else that was one bedroom was renting for $750 a month. So we started to see the potential in this deal. And a lot of times you have to see what could it be versus what is it today. And surprise, surprise, I was in Ohio at the time. So this guy calls me, we're looking over his deal, and I'm 15 minutes away. So I say, hey, you want me to run over there, check out the property? Because sometimes stuff looks good on paper and it actually is not good at all. So it looks good on paper. He said, yeah, run over there and check it out. So I go by there and it's got new parking lots. It's got a new roof. It's got freshly painted, front. It's got vinyl siding, wrapped exteriors. It looks like a solid deal. Nice cars in the parking lot, good tenant base. It's filled up. And so I called him, actually FaceTimed him and showed him the property. Said, this looks awesome. This looks awesome, buddy. We should definitely make an offer on this. So we went back and forth with the broker and they got really nervous. Could we close the deal? So they asked, can you show us proof of funds? We offered them 1.3 million. They were good with 1.3 million, but they said, we want to see proof of funds. We want to see that you have the ability to close this deal. So in this instance, since it was a small deal, we were able to show proof of funds, right? We came in strong. We showed them the entire purchase price in cash, which showed them, oh, wow, these guys can close the deal. But what if you don't have the entire purchase price in cash? Well, number one, you probably only need to show the down payment in cash, right? You only need to show the down payment, which in this case would be $300,000 or $400,000. All right, well, what if you don't have $300,000 or $400,000 in cash? This is where you need to use posturing or you need to use partners. So the gentleman that brought the deal didn't have that much cash to show, so he brought in a partner, aka me and my cousin, Yaden, to help him show the cash. So we showed the cash. So we solved the problem that way. You can also solve the problem by explaining to the broker that you are a syndicator. You do a joint venture. What you do is you raise capital from investors. You have an investor pool. This is where the down payment money is coming from. And that's where the down payment's coming from. And if you can show maybe a track record, maybe a portfolio, if you can posture and prove to him that really the question is not the right question that he should be asking, right? Because proof of funds doesn't necessarily mean that you can get the loan. It doesn't mean you have experience. It doesn't mean, you can buy proof of funds on the internet, which I would not recommend doing that, but it's like showing proof of funds doesn't really mean much. You can go to a private money lender and they can give you a proof of funds document for $5. It's not showing the strength. And so if you can talk to the broker and help them explain that, a lot of times you can overcome that proof of funds objection without having to prove the funds. And more experienced brokers typically don't even ask for that. A lot of times residential brokers do that, but commercial brokers, it's not as commonplace. So long story short, we get the property under contract for $1.3 million. $1.3 million, this is about $40,000 to $45,000 per unit when you factor in a little bit of renovations, a little bit of closing costs. So great basis, especially if we can get $700 to $750 per month. A quick and dirty math tool that I use is I take the purchase price per unit. So in this case, let's say it's $40,000. If I can get $400 a month, that's 1% per month. That's a good metric. If it's over 1%, that means it's probably a pretty good deal and I should look into it further. So now $700 a month is more like 1.6, 1.7% of the purchase price. If that math is making sense in your head. I know I'm talking in the air, but hopefully you get the concept. $800 would be 2% per month. That's a home run deal. That's a deal that's very, very difficult to find. Sometimes you see it in the single family realm, but remember, we're closing 34 deals in one deal, right? That's the scale of multifamily. That's the beauty of multifamily versus just going out hunting on your next single family rental. Okay, so we get it under contract and we put down $20,000 earnest money. Earnest money is the deposit to show you're serious about the deal. You give it to the closing attorney, or the title company, whoever is closing the deal. And it's kind of a good faith that we're going to close this deal. So what if you don't have $20,000? You got to get that from somebody, right? Sometimes the sellers won't require you to put down any money, but then you really look weak. You look like you're just playing, you're not serious. So you need to find somebody to give you the $20,000. And the $20,000 is not non-refundable, right? If you go into the deal and you don't like it, you dig into the rent rolls, you dig into the area, you're not able to get your loan. There's all sorts of ways that you can back out of that deal and get the $20,000 back if you have to. So the deal that we worked out with the seller was we would put the money down and it would be refundable for 45 days. But after 45 days, it's not refundable. We have to close the deal or we lose the $20,000. So at that point, we really need to have our loan in place. We need to have gone through the property. We need to have walked all the units. We need to know what we're doing, know what we're closing, so that we don't risk losing $20,000, which nobody wants to do. So we went into the due diligence period. The due diligence period is where you are making sure that what the seller has told you is the truth. You're making sure that your assumptions are right. So the major things that we want to do are verify his expenses. So we're going to go through and say, are the taxes really going to be $10,000 a year? Is the water bill really running, $1,000 a month? What's the insurance? Let's get an insurance quote on this. Let's get some debt. Let's see what we can get for our lender to loan us the money. How much is that going to be? You make all these assumptions when you're putting it under contract. Now you're verifying all these assumptions. Are they right? Are they true? Did I make a mistake? Did I over-exaggerate or under-exaggerate some of my assumptions? You also are walking every single unit. This is super important to do, to walk every unit, go in and don't take their word for it, right? Because if you walk into 33 out of 34 units and you don't, oh yeah, that guy, he's not there. I lost the key. We can't get in there. And then when you close and you finally get in there and there's mold everywhere and it's abandoned and the tub is leaking and it needs $40,000 in renovations, well, too bad. That's on you. You didn't inspect it and you're going to have to pay for that and be stuck with that. So you really need to walk every single unit when you're under the due diligence period. And it also gives you an opportunity to retrade if you need to retrade, right? Which would be renegotiate the price. We were under the assumption that these were in good shape. They aren't. It needs a new roof. It needs new air conditioning. We scoped the sewer lines under the parking lot and they're all cracked up. We're going to have to dig up the parking lot to replace the sewer lines. You don't want to find that out after you close the deal. Make sense? So we get almost to the end of the due diligence period and we are on day, I think 43 of day 45. And our lender comes to us and says, we've got you a term sheet. So in commercial lending, you put it out to the lenders, they give you a term sheet, and then they give you a commitment letter. And once they give you a commitment letter, they're pretty much locked into that rate. They're going to give you the deal. Now, it's not done until it's done, but for the most part, if they give you a commitment letter, they will honor that commitment. They will loan on that property at that loan at that rate and that term. So we are at the term sheet. They say 6.2% interest, 25-year amortization, 5-year term, and I think like 1% of the loan in. The leverage was pretty low. They would only give us 68% of the purchase price. So that means we have to bring 32% down, which is a lot. But it was a great deal and we were pressing forward, but we didn't have a commitment letter. And remember, on day 45, that $20,000 is non-refundable. So we asked the seller, could you give us one more week? Give us 5 more days on the due diligence period before our money goes non-refundable. We need to get this commitment letter. Didn't think it was going to be a big deal. However, it was kind of a big deal to the seller. The seller had inherited this property. He wasn't really a landlord. He wanted to be retired. He wanted to take his money and go do whatever he wanted to do. He didn't want to deal with this 34-unit apartment anymore. And so when we told him this and that we still had to get an appraisal, I think that he thought, man, maybe these guys aren't going to be able to close this deal. Maybe the bank's going to back out. Maybe it's not going to appraise. Maybe they're not going to get their commitment letter. What if I have to start all over with somebody else? The interest rates have been rising this whole time. The economy is getting worse. My property is getting worth less and less with every day that slips by. And so he made us an offer. And this is where this deal got really cool. He said, I'll loan you the mortgage. I'll loan you $750,000, but you got to bring the rest for the down payment. I'll give you 5% interest. I'll do it for 6 years. I'll give you the same amortization, 25 years, if you'll do owner financing instead of the bank. And at that point, I would have said yes. But here's where it got really cool. He said, I'm also going to lower the price $100,000. So he lowered the price $100,000, and we didn't even ask him. Lowered the price $100,000. We're like, okay, definitely done. He said, but you got to close in 2 weeks. So we needed $450,000 for a down payment and another $150,000 for renovations and closing costs. So $600,000 in cash and $750,000 in owner financing, and we can get the deal done, and we'll still have about $150,000 left in the bank to bankroll the project, get it going, get the renovations going, and work our plan. So we closed the deal, and everything goes off very smoothly. When you do owner financing, it's really easy, right? Nothing's contingent on anything. There's no bank involved, and the seller got $450,000 less his costs and fees, and we got the property. So how do you do this though if you don't have $600,000? You may be thinking, well, cool, Jennings, you plunked down 600 grand. I don't have that. Or even if I did, I don't know that I'd want to tie it all up in a real estate deal. Well, I didn't want to either. I didn't want to tie up my $600,000 in that real estate deal because I want to have that liquidity there in case something goes sideways on one of my deals. I want to have that liquidity there so that I can show other lenders that I'm a strong financial bet. I want to have that money there so that when I want to put something else under contract, I can show liquidity, liquid money in the bank. And so what we did to buy this deal for no money down and owner finance was we went out to our investor network, right? Going back to telling people what you're doing, putting your hand up and saying, I buy multifamily apartments. I'm a real estate investor. I'm a syndicator. I raise private capital. I help other people make money. And so we put out there and said, hey, we'll pay 15% interest on the money if you loan us this down payment. And you can look at the deal. You can look at the underlying fundamentals of the deal. But they don't have a mortgage on that deal, right? There's a bank that's involved, or the seller was the primary lender on that. So their recourse was me. So if I don't pay that loan, they're going to come after me personally, but they can't foreclose on the property. So they have to trust me, and they look at my portfolio, they look at my credit, they look at my partners, and they decided to do the deal. So we went to 3 different people, and they gave us a collection of $600,000, some more than others, but all in, we got the $600K. And now we've got to pay 15% interest on this money until we pay it back, which is expensive, right? I mean, that's $90,000, 600 grand at 15% is $90,000 a year just in interest. However, the deal cash flowed really, really well. And so we could afford to pay this private money, and we didn't have to give up equity. Now, the other way to do that would be to give up the equity, give up some equity and a much lower rate, but let them share in the profits, right? You split up the risk. You don't have to pay them such an exorbitant interest rate. And you may be able to get away with 8% or 10% or 12%. It doesn't mean that you have to pay 15%, but we wanted to offer that because it was a great deal. The cash flow was there from the underlying asset, and we could make that number work. So we ended up closing the deal, raising the capital from 3 different private investors, and getting it across the finish line. And now what we have to do is we have to do our value add. So we have to do light renovations. We've got to get those rents from $500 to $700 or $750, whatever the market is in Barberton, Ohio. And from our research, we think that we can get that. And we've actually signed a few leases at $700. The prior owner did. So we knew that at least $700 was feasible and was doable. And so when we get all of the property to that rate and we've stabilized and we can show 3 to 6 months financials, then we'll be able to refinance the property with another bank. We'll pay off the primary lender, which is the seller. We'll pay him his $750,000 or whatever we owe still on that. We'll pay back the $600,000 to the private money lenders. Now we don't have to pay out 15% interest anymore. And so our monthly payment will probably drop when we refinance this, even though we're going to refinance it at a higher rate, because we got to get at least $1.35 million loan, right? 750 plus 600. We got to get that, and that'll be our new loan. So we got to make the property worth probably $2 million to get the appraisal at that. And our pro forma is to make it worth $2.6 million stabilized. When we get there, the property will be worth $2.6 million, and we can calculate that by taking the profits and dividing it by the market cap rate. So what does all this mean? I get that we've gone through a lot of numbers. This is a little bit more of a technical show, but getting to the heart of the issue is the 3 of us, through connections, through networking, and what each person had, we were able to generate value out of thin air, right? I was able to own a piece of that deal. My cousin business partner, Yaden, was able to own a piece of that deal. The gentleman who found the deal and had the relationships and ran most of the due diligence, he was able to get the lion's share of that deal. The private money investors were able to get interest on their money. And the seller is able to get a monthly payment now for the next, I mean, we have a 6-year term with him, but at least the next 18 months, he's going to get that, and then we're going to refinance him out. So he was able to get the price he wanted and close, stop having to deal with this property. And it all boils down to being creative and thinking differently and leveling up your expectation of, what do I want my life to look like, right? If you're listening to this show and you're not happy with how you're spending your time, the passion behind your career and what you're doing, there are other ways to generate income. There are other ways to make this value out of thin air, as long as you're helping other people, right? I'm helping the guy who brought the deal. I'm helping my cousin. I'm helping the seller. I'm helping the private money lenders. And we're able to generate this, a $1.3 million profit just through this idea and executing on it, right? So this is the whole point of this show, to unlock your life and think differently. If you're not happy with the way you're going, reach out to me. I'd love to talk with you. I try to answer all my DMs, private messages, whatever. And if you're enjoying the show, make sure that you drop me a 5-star review. That'd mean a lot to me. So guys, that's all I got for you today. Make it a great week, and remember to unlock your life. Peace.
This is thepodcastfactory.com.